Hello and welcome to Your Hometown Solutions. I'm Jean Newell, your host from Waterview Realty. And in the studios with me today is one of my favorite co-hosts, Carolyn Wolf with Certified Mortgage Planners. Hello, Carolyn.
Hi, Jean.
So happy that you're here today because we're going to kind of pick up on some of the things that we discussed several weeks ago on mortgages and qualifying and various things. And we're going to kind of go through some of the things that people might not be aware of and review what we already discussed. But also in the studios, we have one of our esteemed guests who's been on before, and that's Eric Morgan, who is an attorney here in the Melbourne area. And Eric, he specializes in bankruptcy, criminal law. Hello, Eric. Why don't you just tell us some of the things that you specialize in?
Thank you. Yeah, I do handle a lot of bankruptcy. I have a website, spacecoastbankruptcy.com, also criminal defense and traffic through spacecoastdefense.com. And then I also do a little bit of injury law, spacecoastinjury.com.
Oh, great. Oh, we'll be repeating that if you missed it. So you're probably wondering, how is a mortgage broker and an attorney, how are we going to blend these two shows together? Well, believe it or not, we have a lot of ties with getting a new financing or going out and getting a new loan and all the things that happens when you start pulling your credit cards and credit reports. So, Eric, just give us a minute or two. Let's talk to Carolyn about the first step before we're even looking at homes. We want to pull their credit report. We want to get not approval, it's the pre-author. Gosh, I can't even think what it's called now.
The pre-qualification?
Thank you, qualifications. I'm getting tongue-tied. So let's start there because that's going to open up a whole new series of topics when it comes to maybe their credit and what they need to do or what they don't need to do to improve their credit. So we discussed in earlier shows the difference between a broker and a banker and so forth. But let's do that again kind of quickly. Let's talk about the difference between a broker and a banker because and what you do as a service that's so important.
Okay, great. First, I do want to also mention that I am. My name is Carolyn Wolf, and I'm with Certified Mortgage Planners.
And you need to put the number.
Yes, my NMLS registration number is 268538.
I wonder why licensed real estate agents don't have to give out our license number.
I don't know. We're
do you have to do anything,
regulated.
Eric, with law? Do you have any kind of a license number you have to share? No.
Sure. Any motion that I file with the court, any notice of hearing, anything on paper that I sign and file has to have my.
But you don't have to say it on air. See, Carolyn has to.
I'm happy to say it.
Yes, we are required.
They're required to say it.
Yes.
It's amazing. Well, let's talk about the broker-banker, what the difference is, and what's involved with before people start looking for a house, why they would want to call you ahead of time, and possibly even 3 or 6 months out.
There are a couple of big differences between going straight to a bank and or working with a broker. The biggest difference is as a mortgage broker, we are not only are we registered with the NMLS as far as our number, but we are also tested and licensed with the state that we do business in, whereas a banker just has to be registered. The other really big one for consumers is with a bank, you have just them to work with. It's just their specific guidelines, and we all have standard guidelines that we have to adhere to, but each individual lender or bank can add to those specific guidelines. So sometimes you might go into your actual bank and get denied for one reason or another. So you're thinking that nobody would help you when it's not the case 90% of the time. And with the broker, we are signed up with numerous lenders. So we have all different types of options and avenues to work with for certain people. Because sometimes people have a little bit of a niche where we need to put them, and one lender will do it and one won't.
This might not seem to be the appropriate part of the interview to talk about this, but since we have Eric right here, a lot of people might think, gosh, I had a bankruptcy a few years ago. I probably will never qualify for a mortgage again. First of all, Eric, what's the time frame that they have to wait to where their credit is pretty well cleared up?
Well, it can vary, but I have met quite a few people who've bought new homes at approximately 3 years after having filed their first bankruptcy. But it does depend on what type of loan they're getting, whether it's a FHA or some other type of loan. And every bank has their own policy on when they're going to loan after a bankruptcy, if they're going to loan. And the other thing I'd just point out is,
I meant kind of in general, wasn't it 9 years you have to wait before your credit kind of turns around? Or
no.
They come off of credit after 10 years.
10 years, okay.
A bankruptcy. That's just where it's being reported, but it doesn't necessarily keep you from getting any financing.
Okay, that's good. So you can probably answer that question now, Carolyn, a little bit more as far as you have, sometimes they get foreclosed on different avenues, but they're not out of the picture.
No, not at all.
You can still get financing. It might not be at the lowest interest rate, but there's
just
still
like Eric was
things.
saying, there's a general rule that most of us have to go by, but nowadays too, there's a couple of different private lenders that'll come into the picture where you could actually do it a day out of bankruptcy. It just really does depend. It depends on the bankruptcy and the circumstance.
Well, while we're talking about that, because credit reports are so important, whether you're financing a house or getting a car, it doesn't matter what it is, you want to get your credit scores as high as possible. If you've just come out of a bankruptcy, let's say Eric Morgan with Morgan Law, what would they need to do that you could maybe share with them, or maybe Carolyn, you could comment on what they need to do to start establishing credit again so their credit line starts growing, or their credit scores?
Yeah, just to pick up a thread from before that we didn't quite capture, I mean, buying a house, there's so many variables. It's not just about when they filed their last bankruptcy. It's also how much of a down payment do they have?
Exactly.
What is their income? What house, is it that they're buying? What type of collateral will the bank have? What are the bank's interests in terms of having loans in certain areas or neighborhoods or regions? So there's a lot of different factors. It's not just about when they filed their bankruptcy as to whether they're going to get the loan. But as far as coming out of a bankruptcy, some people are going to be reaffirming their debt maybe on a car or on a home, and so their on-time payments going forward are going to help them rebuild faster than a person who maybe did not reaffirm their debt on a home or a car payment that they had at the time of filing. But even if people did not reaffirm, then they're going to want to obviously have some income and then be incurring some debt and paying it back on time. And there's a lot of those tips out there of, like, if you've had if you have a balance, you don't want to max out that balance. If you're
on a credit card,
if your creditor's willing to give you a greater available possible amount of possible lending, you want to accept that, because the ratio between how much you've borrowed versus how much you can borrow, that affects your credit. It's very nuanced. And a lot of people, especially after a bankruptcy, they don't want to ever have credit, or they only want to have the tiniest little amount of available credit, and that does hold them back, more so than just the fact that they filed bankruptcy, that they're not playing the game of rebuilding credit.
Exactly. Now, I just wanted to check with you too, Eric. What can you explain again what reaffirm means?
Right. So when a bank makes a loan on collateral, that obviously, if it's not paid, they can take the collateral back, and they can also go after the original borrower if they sell that collateral for less than what was borrowed to buy it. So if the house was bought for $150 and it's sold in a foreclosure sale for $100, that leaves $50,000 that's a deficiency, and they if the person's not filed a bankruptcy, the bank could then go after that person for the unpaid $50,000.
Okay.
Now, when a person files a bankruptcy, they can choose to not reaffirm their debt, but maybe keep paying on that house. But they don't personally owe on that loan anymore. But the bank still has its interest in the home. So if 3 years after a bankruptcy, the person did not reaffirm, they lose their job and they can't pay, the bank could foreclose on that home, but they would not be able to come after that person for any deficiency. But if the person had reaffirmed, however, and they lose their job 3 years later, then the bank could. So it's re-promising to pay on a loan that would otherwise have been discharged in the bankruptcy.
Okay, so it's like keeping that house or keeping that car
and then
letting
loan.
everything else go in the bankruptcy. And you continue to make the payments.
Right.
On those.
You can only reaffirm on collateral. So you can't reaffirm just on a regular credit card or some loan from a family member. You can only reaffirm on collateral, such as a boat, car, house, something like that.
Okay.
What exactly would be the pros and cons about reaffirming? When do you not want to reaffirm?
So you don't want to reaffirm if your income and job are unstable. You don't want to reaffirm if you owe way more on something than it's worth. You don't want to reaffirm if the deal you got was terrible. The interest rate is way too high, or the car doesn't work, or the house has repairs that you're not going to be able to manage. I remember a few years back I had a teacher, and that her house had some horrible roof problems. She had enough money to pay the mortgage every month, but she had no money to maintain that home. And so she ended up not doing the reaffirmation because, while it was going to be good for the next few years, eventually it was going to be unlivable, and she just didn't have the money to maintain it.
Right.
If you don't reaffirm, does that give the mortgage company an opportunity to say, well, you really don't have any anything into this anymore? We can maybe take back your mortgage or do something that's not within the guidelines that you originally signed with?
I've never seen that happen. It just means that on-time payments you don't get credit for that. So that teacher may have continued paying her mortgage, continued to remain on time, but that didn't help her rebuild her credit. On the other hand, when she eventually needs to retire and move out of that house and get something that's appropriate for retirement, a little bit smaller. She'd raised 3 or 4 kids there. At that time, they wouldn't be able to come after her for a balance. So.
Mm-hmm. Okay. Well, we both learned something on
right.
it anyway. So, taking something like that back to the credit, if you're looking at someone's credit, Carolyn, and we always state that you want to talk to Carolyn as a mortgage planner, because there are things that you might want to suggest months out that they need to do now to get themselves and their money seasoned.
Correct.
We always like that word, seasoned money.
Right.
So just knowing what their situations are going to be, you might want to talk to them 6 months out just so that you have an idea of what they're talking about. And I know Eric mentioned one of our tips, which was that credit card with the 30% on. Let's talk a little bit about what you want to look at as a total picture and how you might help them.
Okay. Thank you, Jean. Yeah, it's absolutely. I can't recommend or suggest any. Know what I'm trying to say.
I know we're fighting a thunderstorm here. We're wondering maybe it's affecting us. Yes, you might want to
stress enough
Mm-hmm.
as far as when people are starting to think about purchasing a home. To really, if you're 6 months out, it's a fantastic time to talk to us because we can give you some ideas, let you know as far as what to expect as far as closing costs and down payments. But like you mentioned, the big one is the credit, especially, we all have these things with our bank statements or with, certain credit cards where they give you a credit score, but it's not always, actually, I would probably say 90% of the time, it's not going to be the same score that we have. It's a consumer credit score. And so when we pull your credit, there could be some things that pop up that not necessarily going to pop up on a consumer's credit card or credit report.
And before we go any farther, go ahead and give out your website or your email and your phone number, because we're going to be talking about some things that you might want to write down and give Carolyn a call, because you are what I love about working with you, Carolyn, is you're just a phone call away. So many of the on-site places, you've got to fill out paperwork. You never talk to anybody. You don't even know if they are really looking at you as an individual and what they can do. Well, you can talk to someone within a half an hour's time and know exactly where you can place them and what you need to do to get them. Tell us the meaning of seasoned money, too, because we're always making fun of that. But go ahead.
So my name is Carolyn Wolf, and my website is www.floridalendingpro.com. And my phone number is 321-795-9103.
And you're right here in
Brevard County,
Right.
yeah,
And
in
you
Indian
can
Harbor Beach.
Walk right in and
Right.
make an appointment, see Carolyn, or on the phone.
Right. And that is one reason why I worked for a bank for years, but I love being a broker because I get to work for my clients. Mm-hmm. I'm not, and a lot of people will as working for a bank. However, I mean, they have their products and they need a cross sell or they need to push